Monday, February 23rd, 11:17 a.m. So we're off to a new trading week. I did not watch the open. We are post the 10:17. Shout out Gucci Mane and the peak of the morning move. So checking in with our trades. On Friday, we ended up again looking pretty bullish into the close of American Eagle. And we got a nice little pleasant surprise this morning. So I did not watch the open, but it seems to be, again, I don't want to say it's exclusive to American Eagle, but certainly we've seen it routinely with this security. Is again this kind of like, it's not a gap open, but just the spread is very disparate coming off the morning trades. So I didn't watch it, but it seems to be that, again, the first trade was executed. That's what you're seeing here, the top of this candle. So we're at 24.73. So this 24 level was really kind of what we were getting, this weird price action we've been discussing. So we kind of broke through that. And so no attempt at a movement up. Certainly on the daily, this is looking to be a nice bearish move. And then the next technical thing we're looking at is just this gap chart gap right here from the 21.24 to the 22.26. We got the earnings coming up, and so we'll kind of just assess this as it goes throughout the week if we want to. Adding probably won't. Again, the 300 share size. I think the last time we traded it, I think it showed at 350 shares, but now we're into the profit, and so we're still, again, this initial move from the 23.96 is our price average down to this 23.13. Again, the given sentiment on any day is more relevant than any other sentiment. We closed looking bullish on Friday, and we open up, and now we're looking very not bullish. Good for us, but for the management of the trade, probably won't have a stop loss today. Again, assuming we'll check back in after lunch, so won't even do assumptions or like where it's going to end up. But the most likely what's going to happen for me on this trade is still no stop loss. I will try to protect any profit if it does start to appreciate fast, but it has not moved away from this entry price enough for me to want to add if I think it's going to continue to the downside, which I do. But once you go into profit, adding to your position is different than if you're in the negative and you're trying to, dollar cost average or just increase your share size, but to move your price average to a higher or lower position depending on if you're long or short. And so, meaning we've moved in the right direction. We've not moved enough in the right direction for me to want to add or for me to want to put a stop loss to preserve any profits. Because again, realistically, the volume weighted average price, this could fluctuate to 24 and it'd still be well within an expected move. And if it were to do that, I'm still bearish. So I would not want to get, if I go out, go on a hike, go on a walk for an hour, get stopped out, and then it retraces and goes back to, hits 24, then comes back to 23.47. Again, not trying to dance around any trade that I'm specifically trying to make money on. And so popping over to SanDisk, which is the one we have tried to jump around on with our price. And so the 621 add on this day did not pan out to be that great. This is the full share size, 2 whole shares short is what I'm doing here. With the mindset that I'm also exposed on American Eagle. With American Eagle being in the profit, again, once I can have it into a position, if I can manage this one where I can have a stop loss pretty much guaranteed into profit, which would pretty much effectively happen either later today or into tomorrow if we stay at this price level and more time passes, or if we go to a lower price level. Meaning, again, this volume weighted average price is right around the 23.50 is right around where I put my, preserve the profit, make $150 or whatever, but it would still be too tight just for my liking to stop me out and then continue down. I'd be pretty sad. And so no stop loss here, but if I get this into a place where I have a stop loss in the profit, or if I close this position in general, then I might add a little bit of exposure to SanDisk. And so as a trader, I'm always having, the trades present themselves, the opportunities present themselves just by watching the market, following along, see what's going on. There's always enough opportunity. And so then once you get, I just don't like to have jumping. There's no, anything that you think is going to go up makes sense to buy. Anything you think is going to go down makes sense to sell. But just on a personal management level, again, like I have one screen. I don't have a bunch of screens. To me, if you take your 3 highest conviction trades or trends, and then just kind of follow all of them at the same time, and it's like there's always a trade that you can feel comfortable taking, as opposed to just jumping over to a new sector, which you can do if you have a risk tolerance. There's absolutely no reason not to, because you immediately get into a profit position, you put a stop loss, and then if you make more money, great. If you don't, you make a little bit of money, fantastic. And so on a personal level, I just don't like to be exposed, certainly on the short side, because, right, if you buy a stock and you put $500 in, and you can not look at your terminal, right? You can not look at your brokerage account. If it goes to zero, you're not losing any more than you've invested. If you're short, you can there's no limit to effectively what money you can lose. And so point being is I just don't like to overextend myself on a single security, and then certainly not spreading myself around to different trades. And so Gus, our in-house analysis, also agrees, as you can hear in the background. And so that is what we're looking at our 2 trades. The market overall is selling off pretty. Again, I don't know what to say. To me, this is just normal fluctuation. We're at the, I don't even say the tail end. We're at 3 years going into the 4th year of appreciation. Springtime kind of seems to be the retracement. I don't even know if that word's appropriate, but just not continued appreciation. And so added a little bit to Joby. Again, all small positions. Gemmy still has not been acquired by Zuckerberg, which kind of stinks. But I bought 3 more shares here. Nothing of substance anywhere else. And there probably won't, again, there won't be. Like I have to have a conviction on a trade to even want to trade anything, which I don't have. If there was a big retracement, some sort of freak event, or just a big, April of last year type event, again, I would move some money off of the treasury bonds and move them into the index funds, the income funds on the indices, but I would not do that without a big retracement. And so just kind of chilling, waiting for the earnings on American Eagle. Again, this is looking good for us. We have this whole trading week, and then the earnings will be, I think we still have all of next week as well, but it's on the 5th. The morning of the 4th is when both Kohl's is okay. Kohl's is on the 10th, but Abercrombie and Fitch, which I see is more within the sector, more relevant to American Eagle than Kohl's. But yeah, so that's at 8:30 before the market, and then the actual American Eagle is after the market on the 4th. But I'm fully expecting the movement of Abercrombie and Fitch's reporting to be the same exact stimulus as American Eagle. So the morning of the 4th is what we're kind of looking at for the next big stimulus thing. So I think it's the 23rd right now. That's right around, 10 days. I don't know how many trading sessions that is. Regardless, we have this whole week where I don't see the earnings as the biggest stimulus. Certainly into the next week it will be. But we'll just manage it along, looking pretty good for now. So that is what I have for you on the morning, and we will check in later. Monday, February 23rd, 1:13 p.m. Checking in with our trading vlog. American Eagle is what we're looking at currently. We moved down even a little lower since the morning open. So now we're in a good chunk of profit. We're not super far away from our entry price, but when our last clip, our volume weighted average price was again all the way up at like 23.89, 23.90, getting kind of closer to our entry price. So now we have a decently strong move away from our entry price, not super in the profit, but in a position where our volume weighted average price for the day has come down. Anything above that substantially would just be some sort of reversal. We do have some selling pressure just overall in the market in general. So is this move American Eagle specific, or is it the overall market, or is it a combination of both? I tend to think it's both. So we have a tentative hard stop loss currently, pretty just close. So let's see, where did I put it at exactly? But just to protect our entry price. This is one of the moments when sentiment makes sense to, don't fight the momentum or don't fight the move. It's going in the direction we want. We're trying to let our winners run. But with 300 share size, $1 per share is a $300 fluctuation. So it's enough where if for whatever reason the market turns around, American Eagle specifically turns around, because again the momentum is as most relevant to the day that of the trading. Like this session, like we said, we didn't even all of this past, like honestly I want to say like 10 days of momentum we've just kind of broke through now. And so certainly anything above this 24 region, like 1, 2, 3, 4, 5, 6 days closing above 24, opening and closing above 24, rejecting this lower 23, because now we've touched below the 23 into the 22s, which we haven't seen since I closed the first leg of this, again, probably about a month ago at this point. So point being is, when we're sitting here and we're showing, we're going in and out of profit, right? At this point, we weren't in profit, but we're like right around our entry price. And then we fluctuate a couple $100 out of profit purely because of the share size, the price actions well within expected movements. But then we open up today. I did not see the open. Almost certainly there was a large spread. But point being is, this move, if you don't have this short on Friday, you don't even hit this. You could sell immediately as the market opens, but this momentum breaks. Like, when do stocks actually move? You'll see these day-to-day charts and you'll think these big appreciations intraday, and sometimes it does happen, but a lot of times it's just like after the market closes, some sort of news cycle, and then the spread tightening on a given security at the open. It's kind of like the big move throughout the day. That's not all of the time, but point being is, if we were to, in the same way we try to dance around SanDisk and just get a better entry, we would have missed this move entirely if we try to do this with American Eagle. Almost certainly would have closed at a small loss, $50, $100, and then missed the move and just kind of been sitting here like, what do we do? And so that's for the one trades that I'm trying to do for money, which is literally every single trade. But if I'm making content like SanDisk, it's just trying to document the momentum progression. But point being, what was I forget what I was just about to say. But regardless, the intraday moves, I don't want to say, I don't even want to give like a percentage, like 50% it's the move right at the open or this or that. But point being is, again, the past 10 trading sessions that we've been monitoring, we like sliced through that price action momentum channel pretty much just right at the open today. So if we didn't have our position, we try to dance around, we would have been, feeling kind of sad. But regardless, a tentative hard stop, and this is just to preserve our entry price, because back to it's going in the direction we want. We're not going to try to, this is kind of like, I don't want to say price discovery, because price discovery is typically when a stock breaks out to the upside and then you don't know, like this price action gives us some sort of, hey, I think it could trade in this range. And then if you're sitting there watching the price action on the day-to-day, you can feel the momentum of how severe or how volatile a move is. And so certainly from following this price action, this is a slice right through this, again, certainly the past like 10 trading sessions, and then we're even getting back into down into here, which would have been like 3-4 weeks ago. And so point being is, I'm going to have this hard stop loss purely to protect the entry price. I'm not going to try to maximize profit by intraday trading this. So what will happen, hopefully this closes down below somewhere 23.5 or lower. And this is the first day of what I would say of a move. We break this price action sentiment channel, and then I would expect just any move in general to be about 3 days until either a consolidation or a reversal to minor, major, medium extent. But typically moves continue for 3 days, blow out on the fourth, and then either reverse or consolidate. And so the consolidation, if we look at the downtrend after the last earnings that we traded, we closed that one a little too early, but that's documented right here on this channel. And so we can see this right here. Right, this is the momentum. We kind of top out right here, and then we have 1, 2, 3. Even I would really say this candle into here is our 3 to 4 day move. You kind of get some here, but these three green candles right here are like the relief. And so we're kind of, again, to pick our profit levels or like where we want to execute or change our position is, again, based off of the move of that it's making. And so this stop loss is purely to protect the entry price. It is not to maximize profit. If it was to maximize profit, it would have been right above the VWAP, probably like 23.51. But it is in our favor. I don't want to, again, cut winners too short is the sentiment terminology wording you'll hear. And so that is what we're doing, feeling pretty good over here. Again, this move was not really expected, but that's the whole point, is this like the entire conversation we're talking about this again, this weird price action, feels like an absolute floor, no real buying pressure to the upside, but it looks bullish. It certainly closed bullish into Friday, and then to get this move where it breaks that channel below the 20 and this 24.13 is literally, again, like the first opening. It's like the opening 7 minutes of the trading session. And so it's just like, again, I'm talking as someone who sits here actively, watches the open the whole day, just sitting there with this stuff open. And so you see these day-to-day charts and you see these movements, and they are big, and then you go trade something, and then you're going to be immediately immersed in that 3 to 4 day period of momentum sentiment. And then you're going to do the same thing where it's like, where could this stock go? Where was it at? You're going to start doing technical analysis. But if we try to dance around our entry price, we would have missed this move. And I expect this to go down to getting to close this little gap here from this move would not be surprising to me from here. And so we are post the lunch trade. It is 1:21 p.m. Feeling good and looking good over on American Eagle. Because now, again, unless it like gaps up overnight, which kind of a potential, but again, what would be the stimulus for that? American Eagle is not going to gap up just on the. What do we have on the news today? Some Iran going on, some more Trump kind of fluctuations. The point being is I don't see any reason American Eagle would gap up. SanDisk, different story. Again, still momentum, inching closer towards the momentum side. The market's down today. This one's still up. But this is, to me, a stock-specific momentum present kind of revival. I've said previously in the last little trading entries, each day that goes away from the momentous move is like more bearish or more reversal to whatever direction the momentum is going. So right here, again, technicals don't really mean much to me here, but this technically is looking a lot more bullish. Momentum-wise is kind of but from this position right here at the 683, a denial of 700 and to the downside would not surprise me in any capacity, and a breakthrough to up to like 1,000 would not surprise me at all. And so we are at our max size here at 2 shares. With our, again, barring some liquidity issue, this will be what I would consider effectively a guaranteed profit. It might be trivial, might be right around our entry price, but this should be a trade where we can manage, again, barring some sort of gap up, a guaranteed profitable trade. And so, again, this is about $7,000, $8,000 of exposed funds. Every bit it goes down, it's less money we have to cover. But on a personal level, again, if we look at our margin requirements, this is how much you have to have deposited to hold the position. So again, we are infinitely past what the brokerages require for margin. But on a personal level, right, if I have, again, 30,000 free cash, 32,500, 8,000 of that, or again, with the 2 SanDisk shares, that's another 1,200. So we'll call it 9,500. We'll just round up to 10,000, which is more than it is. But $10,000 exposed to the short, so I have a liability to cover $10,000. And so I always do my short exposure because I could easily sell, the treasury bonds and, free up more money to cover the short. But of the free cash is kind of how I do my personal accounting, right? I'll expose $10,000 and I have 30,000 free cash. Granted, the 10,000 or 9,200 of it is from selling the shares, meaning I have the liability to cover them. But 2-to-1, 3-to-1 of free cash is the typically what I would do for short exposure. But again, with highly liquid stuff, like again, you can immediately go sell. Right, we haven't checked in our boys over at SGov, which we're big chilling over here, but you can immediately sell at profitability here. And so not a huge consideration, but that's just what I would like to do. And then when we're over here reading 1929, it's like, we're going 15-to-1 leverage, where it's like we deposit $1, we take $15 of a position. It's just like, that's insanity. And so not surprising. Again, I don't see that as super relevant to our discussion today. But good little update for the lunch hour, right around the volume weighted average price. Yeah, and I might even take this stop loss down because this is such a strong move through through the price levels in which we were kind of bounded from the momentum, and it's to the direction that we expected and we want. And so this is purely if this is like some sort of relief fluctuation, I'll probably keep it. But again, that's how active management works. Is what I say right now. It's not like my plan didn't change, but it's just the price action dictates all of these levels. And so what I say right now could change in 5 seconds, in 5 minutes, or could not change at all. And so that is what I have for the lunch update, and I will see you later. Monday, February 23rd, 4:02 p.m. It was a nasty day, Scott Wapner once said, as the cool breeze blew through my hair that I don't have. So the market is now closed, but that is what Scott Wapner said, that it was a nasty day. He was specifically referencing the Dow Jones. Do I think that the word nasty is appropriate here? I don't know. I don't know. It's a red candle that went down. Look, it's at 488.04. What does that mean? I don't know. See what the S&P is. The S&P nasty? Is that looking nasty today? It didn't seem too nasty. I guess this is less nasty looking than the Dow Jones. But point being, again, these words, the verbs to the motions. I don't know. I'm not too convinced this was nasty. But anyway. So looking back into our trades, where are we at? Last time we were here, we were right at the volume weighted average price just after lunchtime. So I did have a hard stop loss in the last clip, it was pretty much right around 23.80. I ended up taking it down, kind of bounced off this volume weighted average price. I would have liked to have seen it close below that. But again, we're still right at around this close enough to my entry price where I don't want to, like I said, I certainly don't initiate a lot of trades in the 3 p.m. to 4 p.m. time frame. I could close some trades, but I don't like to. There's a lot of flickering in the last couple minutes right before the close where it's like I don't want to put too tight of a stop loss where it's not even a genuine motion of the stock. It's just this fluttering last kick before the market closes, meaning this was a good bearish move down here. Would like to preserve some profits. Like if this goes back up to, again, 25 tomorrow, I'll be rather disappointed. Still looking good for a bearish continuation. Again, looking for like a 3-day move, kind of, which I would consider closing at that point if we're into the profit. $300+ over $1 per share. I'm going into earnings. Again, I'm still bearish through earnings. If we would have continued up from this 26 range, I almost certainly, if we were 26 to 28 or more going into earnings, I almost certainly would have held. If we're into profit when the earnings come, again, we'll be updating throughout the week. But tomorrow probably won't have a stop loss. It very easily could flutter again above to even like up to this floor. So again, this is when it's relevant. Your previous support and resistance become inverses, right? What was support is now resistance. And so we're kind of looking again at this 24, 25 range. That's kind of like the floor that we were talking about, where it seems like a hard concrete floor, no buying pressure. And so that's kind of what we're looking at for resistance. And so it's important to point out technically, all of these places where it makes sense to put your stop losses are also, you'll see, like if we would have had that stop loss, kept it there at 23.80, we would have been very close to hitting it. But then it will hit this stop loss, and then it will reverse pretty much immediately afterwards. And then you're like, well, why did I do that? And naturally, what you're doing again is you're going to pick out these support and resistance. They switch, and so what makes sense to put a stop loss, it could easily be a pivot point where it will continue up to the upside, or it immediately retraces off of that point. And so you're going to feel kind of silly if you retrace off of that point. But that's like, again, this inflection point of when these sentiment price action channels have formed. A bunch of people have sat here and watched this price action from 24, 28 to 25. We'll call it $26. And so we've broken through that. And again, the liquidity of the spread tomorrow is why I took away the stop loss. Would like anything above $100, I certainly like to preserve profit. Always want to make money on all trades. It's not a realistic expectation. You have to have some risk tolerance to make a meaningful trade because there's inherent normal fluctuations with no momentum whatsoever on a stock. just the normal execution of the orders, buying and selling. And so didn't want to jiggle around with trying to be cute with my price entry. Not super happy, not super sad. It's all right. It's not great. But took away the hard stop loss to not get knocked out. And then, because we could easily open up like today. I mean, did not watch the open again, as I've said, but today the first exchange was at 24.72. And so if we were trying to be cute again on Friday, again, we wouldn't even seen the 25 number, or even really, again, anything above the 24.80. And so that could easily happen again tomorrow, where we open up again 23 or 23.50 or lower. It could open up, obviously could open up higher as well, but it's in a price normal fluctuation range where I do not want to mess with my entry price. And so this would not have been like when you see this big. So when we're talking about the most poignant time for me to enter or exit a trade is that 9:30 to 10:15. So we did get the peak low, but to me this is the initiation. This is the initial break of this channel, this consolidation little thing we have here, where I expect any move to be about 3 days. And so let's say this was the third day of movement. I would be looking to close the position into this downward pressure. And so hopefully we get to see that realized, meaning in the next 2 to 3 days we have more downwards pressure. Again, if it does get down into this 21, 22 area, it would be a very reasonable close, which we probably will do if it's before earnings. But again, regardless of earnings, these 3-day movements is pretty. The sentiment of the day is the dominating thing for sure. You get a lot of change because, again, the big change for this stock, it did sell off, but the big change was it kind of immediately just broke this previous channel in the first 3 minutes. Yeah, the first 3 minutes, the 24.40 was that, and so it's just it broke that. And so, and to the downside, we're definitely going to hopefully be better. But point being, if we have 2 more days of continued to the downside, we'll probably look to close or cover the shares into what would make that probably Thursday morning, Thursday into the open or Friday into the open. Again, if the move were to go ideally. The earnings consideration is another added thing. Typically, it trades in one given direction on the week of, which is not this week, but the next one. So that's definitely in mind here. Overall, again, might just look for another stock that does not have a dividend, but this is still something I would hold. If earnings, everything shapes up well, this is something, again, I would hold more into this cycling, way down into what we were expecting throughout here. Again, even getting into the $15 to $10 range would not be surprising. It just depends how shapes up, and it's not really relevant for our management up and through, again, moving away from our entry price. We want to see it to the downside. It certainly will happen. It'll either go up or down. That's kind of your two options. But we'll update as that goes along. Over on SanDisk specifically, again, we did have a good little, again, I don't even call this a sell-off. This is, to me, just normal fluctuation after extreme momentum appreciation. Much less, still all of the technicals to me is just, you talk about it. It does reflect, again, the momentum price action relationship. But once you get enough intuitive understanding, you just kind of feel it out, I guess. But as for talking points, again, what was Scott Wapner and the other host talking about today? IBM had a sell-off, which was kind of interesting. This is one of those things where it happened intraday. When we're sitting there talking about American Eagle trading overnight, it was really when the move decided to happen. But this is clearly intraday, right? This is right around 2 p.m. it looks like, maybe a little before 1:30, 2 p.m. I'm not sure what this is, what caused this, but let's see if we can find any news real quick. But I don't even know how to get the news super quick right here. But point being, something happened, and now we have, I don't have the little news thingy up here right now. But I guess we'll do IBM up here. This is the news flow. Yeah, this is something to do with the tariff uncertainties engulfing President Donald Trump's reciprocal import tariffs hit investor confidence. And so again, this is one of those news events that was why would why would this magically hit investor confidence right at 2 p.m.? Right? Where is the certainty that the tariffs is causing this price action is not in any way, if that's just people saying it is, that is not convincing to me. Another one of these things is correlation, causation. What is exactly causing this? I don't know. Not a stock that I followed. Banking, again, a sector I have no real opinions on. I mean, we're talking about that more in the economics section. Just management of money, also offering financial products, kind of just, I don't know. Again, in terms of trading, I have no real opinions on this stuff right here. This is certainly, to me, looks like a rather dramatic move. Again, this is a 10-year weekly chart. And so just wanted to comment, I don't see the stimulus, the causation as to what caused this. If they're saying this is the Trump tariff, why randomly now at 2 p.m. on Monday? So maybe not, I don't know, not convinced. But a good reaction is just the overall sell-off in what they call technology. Again, I think you need to be way more specific. Technology, to me, a stick is technological, right? Any tool is a technology. And so saying the word technology is a huge umbrella. AI is still a huge umbrella. Memory kind of makes sense. I mean, there's a clear conceptualization, memory chips. And then you get into, what objects have memory chips in them? How broad is that? But point being is memory is a specific enough to mean something to me. Whereas if you just say technology, I'm not sure what you're talking about. AI, it depends on how you use it. But just quick little blip there of some chick gets on here, pretty cute. There's a lot of attractive females everywhere, but a lot of these finance chicks are pretty attractive. But attractive lady gets on here, and you see kind of this reaction to, if you want to call it technology, but Nvidia was a big one. Crowdsource was another one that came up specifically today, or Salesforce. But I don't really know what Salesforce is, so we'll just go back to Nvidia. But we'll just say broader AI, kind of memory, but AI, the subset of technology. That's kind of selling off, where it's been a lot more weak, and it's not been this appreciation that we've seen for the past, certainly the past year and overall 3 years in general. And so everyone's like, is this a big crash? Is this a big crash? And to me, I just immediately think, again, these are all people with jobs, 401ks, families. And so it's like their reaction just to losing anything, just not seeing stock go up, is just like, oh my gosh, what's going on? And I'm over here scratching my head looking at all of these companies at like 15 times price to earnings. And it's just like, if those contracted in general market-wide, that would not surprise me at all. I do think they will continue to trade at, I'm not saying that they will or I expect it to, but it would not surprise me. It is what it is, meaning there's resistance to any sort of major change, and we're all just kind of born into this world. So forward-looking makes sense on a personal level where everyone's making plans, everyone's looking towards the future. That makes sense. But how much future should we have? How much prosperity and growth and 15 times earnings or 100 million times earnings? Why not? And it's just like, that is where I do think contractions of price to earnings comes from. It's just this over-exuberance. When I see money managers getting on CNBC and they have every bit of personal security in the world, they're managing other people's money, so maybe there's a couple more phone calls ringing in the home office. But to see, like, is this a crash? Is the shit hitting the fan? Never. Again, like, you can have like global wars, and that doesn't even really affect given stock markets that much. And stock market is in no way the economy. And so it was a genuine, again, thing to write down. Money managers seeing any sort of just not continued appreciation as like a crash or even a retracement or a correction or consolidation. Just not going up does not mean everything, the whole world's collapsed. And that was truly kind of like the energy she was presenting to the financial conversation. And I'm just like, first of all, there's a ton of sectors. I mean, like, it's just the maturity. The maturity is what I wanted to comment on there. And it's just crazy to me because, again, like, there's no price that anything's supposed to be trading at. We're born into an environment where things kind of are trading where they are. Everyone's kind of introduced to that. So it's like, what would cause a dramatic change from that is the most relevant conversation, not any sort of, the absolute value of a company. But, the dramatic change is the thing that everyone doesn't want to happen. And then to see, again, just today's price action as being seen as a dramatic change when the whole market's trading at like 40 times forward earnings and everyone wants to make $10 quadrillion in 4 seconds. It's like, I think that can tone down a little bit. Overall contraction of price to earnings would not be even remotely surprising. Not to say that it's imminent or even going to happen, but it's just, what should a company be trading at? There is no even reasonable conversation to me. The biggest conversation to me for trading, for investing, people managing money, clients, we want to make dollars. When we're making a decision, clicking buy or sell, we want to make more dollars. Right? The ideal kind of trade to me comes from a company, right? And then they'll start talking about fundamentals. Well, the fundamentals are good. Well, the fundamentals are this. And to me, that's more of, again, this appeal to this prosperity. I'm an investor. I'm investing long into hardworking Americans, and I'm going to, grow with the company. So this is like, shut the fuck up. Like, go back to kindergarten. I don't know what to tell you. But that's nonsense. And so we have this appeal to, I'm a real investor. Even in this sentiment turmoil we have going on, I'm going to look for the companies with real fundamentals. And I'm just over here scratching my head. Real fundamentals is like, again, I would say is like trading at book value. Or more realistically, truly, if you have a company that's at rather... So these big, good lead in here, these big tech companies, it's like, what is the maximum of growth? There is some historical precedent of, again, Pierpont Morgan, was like the founder of Morgan Chase, and then Jack Morgan came along, and then, the passion or the drive kind of like dwindles with management, which is real, but there's no real fundamental economic like timeline of how long a company can last. A lot of times it is like the most poignant with the founder, but to me that is in no way, you don't need to have that. That's just kind of, I don't know what to make of it, because companies can take market share and still like be around forever. At the actual duration, how long can a company stay in business, to me currently reflects a lot more of, again, this founder being the guy that drives the business and everyone just kind of like after him or her. But the point being is, I can see companies lasting a lot longer. I don't know when Google or banking or these big, what would be considered blue chip stocks, which I guess we'll get to that in the economics section, but things with real growth that still have continued to growth. They're huge corporations already. What does the future of a company like that look like? I don't know. I think, again, that's what I was just saying, is that a company can outlast a lot longer, can outlast a founder or a good management team a lot longer than it currently does. Because really what you're doing is, then you have a brand, right? You have a recognized name. You see the Chase logo, you think Chase Bank. And so you have that sort of like staying power to maintain the market share that a good founder or a good CEO or a good management team generates. And so, again, historically, I think we're seeing companies can last a lot longer than they do. And so towards the bigger growth tech stuff, it's like, I don't know where they could go to, why, when, how. Black holes aren't real, I don't know. But point being is, like, what makes a good trade? Because, again, moderating or taking in consideration, when people buy or sell these things, they want to make money. So how does this thing keep going up? Or does it keep going up? And I'm tending to think that it does, or at least, like, again, the maturity of a good company going from founder Steve Jobs in his garage to Apple it is today distributing dividends. To me, that is like what a mature company does, is you're making money and you distribute a dividend. Because, right, if you buy the big thing when people think stocks, they think capital appreciation by being an early investor, which is great. That is, I would say, the most potential, right? If you short something, there is stuff, the limit is zero. If you appreciate value, there is no limit, literally. And so the biggest, most profitable trade that is founding the companies that get traded publicly. But truly, again, that's a different question. But the optimum trade of a given company is people make money on the initial, they found the companies. And then once it goes public, you have people that make money all along the way of these, what are we looking at right now? NVIDIA, all along of this capital appreciation. Then we have huge capital appreciation, which obviously you want, but they're distributing money. And so from a personal investor standpoint,
You just want to get your money back, right? That's 100%. I'm not asking. That's 100% true. And so if you don't need the stock to go up if they're distributing money. And on a personal sentiment level, all anybody cares about is how much money they get back, how much money they invested, and over what time frame. And so you can have a company that doesn't have stock appreciation that's still, again, everybody throughout the entire process is happy. They've made money, they've made good money. A good chunk of people have made tremendous money. Everybody's happy. And so there's no reason for a stock to really depreciate, right? If it's distributing money and somebody buys the stock at, again, I'm not saying this applies to NVIDIA at all, and I really don't think so at all. The overall question is what can a company go to? Like I said, that's what I'm saying is we're short-sighted on this. It lives and dies with the founder, or at least it's the most poignant when it has this, a dynamic founder. But once you get market share and you have a brand names are, again, not distinct. Well, a lot of times they're not distinct to a given person. Sometimes they are. Kendra Scott. Again, just things that come to mind where a brand name is the person's name. But point being is if you have a brand and it has market share, I don't see why that company has to go die out, and it seems like a lot of them do. And so point being is people make money. All of this, you see these green dollar signs, these are dividend distributions. So most people, when they think stock trading, and a lot of times it is, and the biggest appreciation is from the price of the stock. But the overall, again, maturity, when you're pairing fundamentals to return, when you're saying fundamentals, the life cycle of a company to me is, again, this kind of reasonable but rather rapid acceleration growth phase, and then kind of extended growth to maximize your market share, and then the innovation to market share is really what limits overall income potential, and then you maximize the profitability by, in the growth phase, you're trying new stuff out. You're pretty much your market share, the overall value of what you're providing, and then you just try to maximize that. And then you just have some sort of, again, reasonable profit limit. And so point being is you don't need to have any sort of appreciation necessarily to have everybody happy, because again, when people aren't happy or when they're losing money selling stuff, again, that's what forces prices down. But nobody really cares what a price starts at or where it ends at in an absolute sense. They just want return. And so then to the actual where we're at here, that's more, that to me, that's more of a general conversation. Here, NVIDIA, technology right now today, I just don't know where these companies can grow to, at all. I have no real good gauge of growth, where we're at. We're super cycle or we're not super cycle. Again, sentiment-wise, people always tend to think, confirmation bias, a little bit of stock appreciation, price action. You see, memory is short. We're going to overshoot this a bunch. I don't really see that going away. So again, I do see some sort of retracement, but overall growth of where technology, again, what is technology? Subset, what is artificial intelligence, which is really derivative application of sentience. What process can I automate? Again, I'm not such a massive, huge question. I'm not going to try to talk about that right now. But overall, and that's what I'm thinking for today. Those are the talking points that kind of came up. Again, in seeing this, money managers, the pretty lady on the screen, even, I think it's Scott Wapner. I think he's pretty much most of the CNBC hosts, I think, are pretty decent. Again, you guys are all being sued. That is not a joke in any way. But you guys are criminals and cowards. But overall, like I've said multiple times, and the guests they bring on, again, just their discussion of economics is not surface level or trivial. But again, we're all in this environment where it's just you can do all of this analysis, and it's just yeah, it just went the other way, dude. Haha, not. And then you're, again, managing money. I never in 100 million, quadrillion, trillion years, squared plus 5, will I ever manage another person's dollar bills. If I had an email or a phone number and someone would be why is this stock going up? I would 360 backflip off of Fifth Avenue's tallest building right now today, Andrew Ross Sorkin. We're going to go Livermore it. We're going to go Livermore it up. But yeah, managing other people's money, that is not in a million years a job that I would take ever. 0%. Managing my money all day, every day. Other people's money, never. 0%. Anything else I want to talk about today on the markets? No, not really. But when is oversold is another question I have just in general. Because again, it's always this, it is what it is. You look at a stock, there's again the 3-day period and then the overall trend, maybe up to 3 years. Anything past 3 year sentiment makes no sense to me. And so being sold off is an extension of sentiment more so than it is a given price point every single time. And so specifically, if you were looking to enter the tech trade right now, this is one of those things where, again, like I've said multiple times, I would be looking to enter. I would never try to catch the falling knife for a long-term position. If you wanted to trade and try to catch, that 10-15 sell-off, bounce up, great. If you want to try to catch a falling knife after a 3-day momentum move, great. But if I was looking to, again, start a position for the S&P 500 or for something for a longer term, NVIDIA longer term, it's going to be, again, these a period in here when you're looking at from November 2021 up into 2023 where you just kind of consolidate slowly to the downside after you've already started appreciating. So you never want to buy something again like Jimmy. Let's go check over at Jimmy, which actually I might actually average down on this dog shit garbage that the Winklevoss has started, because the crypto trade is kind of eking back into my mind. I haven't said the word Bitcoin in a while, but I guess we'll do again. This is what a trading log talking markets. This is what I want to be doing. I mean, this is, if you give me my money, this is all I'm pretty much going to be doing. But that doesn't seem likely because, again, is the Constitution real? Absolutely not. But anyway, there are stocks that you just buy and they just go straight down the whole time. There's no potential. They had gotten to some speculation market right here, so they popped up to $15 for one day. But this is the type of stock I'm looking to short, where it's not super volatile, it's not really in the public discussion all that much, and you just kind of coast down, and every once in a while you get a nice little 20% down. It's that's what we're looking for. And so we're trying to look for that middle market company that didn't really innovate, that had some sort of appreciation, that everyone kind of forgot about, and is definitely not making money with no dividend. That's the most predictable. I'm going on the stock market today. I'm looking for a trade. That is what I'm looking for. The most appreciative trade you can have is the long positions to the upside, but it's just when do you enter that, right? If you're even looking at NVIDIA, right? And we'll go to here, we'll look at the 20-year chart. Let's see if this pops up. Might take a little bit. Okay, so that might be a little too long. But we didn't start distributing a dividend till about, into 2020. And so, it's when do you buy these things, right? It's easy to look at NVIDIA and be oh yeah, I should buy right here. And it's massive, appreciation. But why not back here in 08? Well, let's check out over here. So then you just kind of bobble around for a while. And so even to the long side on genuine innovation or emerging markets, I would have no problem waiting for it to appreciate 100% and then consolidating after that appreciation. And so the point being is, again, you want to catch these moves. These are the most profitable moves to catch. But it's just this doldrums of nothingness for years upon years upon years. Let's look again at Intel. This was another one that came online. It had a new cycle. It broke out of extremely long-term resistance back in here, when it broke out of this 38 range up into the 69. Nice. But look at this thing. Let's go. I think this is the 10-year. So this is a 10-year chart. And so you could have been you had been underwater for a decade. And so it's just that is what you would super want to avoid. Even taking losses is more advantageous. Your money's more useful elsewhere. And so that's why I'm always so hesitant to try to go long on things. It's just more easy to play the fading of the momentum of the appreciation. But so to the question of when is oversold specifically to something like NVIDIA today, again, I just have no idea. Zero opinion, zero conviction. I tend to think, again, the price to earnings is going to contract. Is that today? Is that tomorrow? Is that in 30 years? When do people mature is the overarching question that I'm asking. And I don't think that's in my lifetime, at all. 0% improvement. And so, I don't know. But that is what we're looking at today. And again, the biggest thing I wanted to comment on, I was seeing her reaction, where it's just Scott Wapner saying this is a nasty day. I will give the Dow Jones, again, we haven't done our little, I want to do, again, an overall reacting or reaction video to the composition of ETFs. It's a long awaited, right? It's going to be right after the Grammys. But point being, it's just any opinion on these again, index funds, which to me, ETF, index fund, just say ETF. It's a fund traded on an exchange. It's an ETF. But again, this kind of looks worse. But for Scott Wapner to call this nasty, well, that's a bad nasty. That's an aggressive word. But I don't know. Again, it's just like what caused this? This is just Trump last year tweeting. I don't know. And so like the tariffs, like that was the big whole commotion, but it's just an abrupt change to sentiment is what causes the biggest like retracements. And so again, like literal actual war is not like more detrimental to economy than like being shocked that war is starting. And so again, I don't know. When you're in an environment where everything is like forward earnings, price to earnings by multiples, 10, 20, 30, what's the right price? I don't know. The price is right. Where's Drew Carey? Let's get him on here. Let's play Coming or Going or, Plinko. I don't know how we'd play this into Plinko, but that would be kind of fun. And so, that is what I have for you today. Probably make this an independent video. So thank you for watching, and I will see you on the next one.